And now with the latest business and market news, here's Jayne Edwards.
Thanks, Alan. Wall Street delivered a bounce on Friday with some decent results and company announcements, pushing all three of the major indices up by around 1% and giving our local market a good lead-in for the week ahead. The mood was brightened by consumer giant General Electric's announcement that it will raise its dividend by 20%. That's a strong vote of confidence amid continuing debate about where the US economy is headed. Fed Chairman Ben Bernanke did little to clear the murky economic picture when he called the present situation unusually uncertain. The major news of Friday was the stress test results on European banks, which found that only 7 out of the 91 banks assessed would not withstand another economic downturn. But the results are already being queried by a number of analysts who think the tests weren't tough enough. Across the week, a series of robust earnings results gave the US market a big lift. The UK market also had a great week, while Europe and Australia rose modestly and Japan was broadly flat. For more on local shares, here's Tom Elliott.
Well, as you just heard, the Australian stock market was up around 1% over the week, although, as is often the case, not all stocks benefited. Now, firstly, Woolworths. This share is a huge favourite amongst both institutional and retail investors, but it did disappoint the market last week with a fourth quarter sales growth figure which was fairly well below expectations. Interestingly, Wesfarmers, which is of course Woolworths' main competitor because it owns the Coles chain, was up over the same period. Telstra also disappointed investors. It's announced yet another cost-cutting program. This time it seems that 300 middle managers are to lose their jobs. Cynics might say this is because the company also is struggling to grow the top line, that is revenue. Telstra shares also sold down over the week. On a more positive note, however, Healthscope shareholders should be punching the air after the private equity bidding war that broke out behind the scenes resulted in a $6.26 per share takeover coming courtesy of a consortium of TPG and the Carlyle Group. Healthscope shares were up strongly over the week. Also, AXA Asia Pacific has been quite weak, but was actually stronger over the last few days. National Australia Bank and AXA SA, which is the French parent, have extended their exclusivity arrangement for another month. This has raised hopes that the NAB will eventually be able to convince the ACCC to allow it to take over AXA AP. We'll see what happens there. Interestingly, shares in IOOF are also up because the NAB is going to try and make moves to make IOOF a stronger competitor, again to help convince the ACCC. And finally, one of the most rumoured takeovers that's been doing the market forever is, of course, Foster's. The shares hit a 3-week high last week on rumours that some sort of a deal might be imminent. Watch this space. Winner of the week is Link Energy, up 23% after announcing yet again it had multiple buyers interested in some of its assets. Loser of the week is Aquarius Platinum, down 12% after the South African government announced new mining restrictions designed to increase the safety of workers.